Everybody, Leo DeSell, I'm glad you're tuning in. This is Phil Schmitt with Schmitt Insurance, and today we're going to go over the ins and outs of homeowners insurance and flood insurance. I think another major question most people have is flood insurance.
Right.
Okay, August 2016 was a terrible year for Baton Rouge when that all hit, and I forgot what the numbers were, but I know it was a very high number of people either did not have flood insurance or did not have content if they had floods. So first of all, explain to us when a mortgage company requires you to have flood insurance. How does that work?
Right. Well, for one thing, basically every house in Louisiana is in a flood zone.
Very
now,
true.
you have preferred zones, which the mortgage company doesn't require you to have flood insurance. That doesn't mean your house won't flood.
And that's X, right?
That's the X zone. So it's X500, either plain X or X500, meaning you're in the 500-year risk zone. So about 25% of the flood claims, this is coming from the statistics that FEMA puts out, about 25% of all flood claims come from houses that are in a preferred zone. So that just tells you that even though you're not in a flood zone, your house is still prone to flooding.
Right.
And we saw that in August of last year.
That's right. So what is the cost if you're in flood zone X, which is preferred, compared to A or AE, which is not?
Well, the X zone policies are called preferred zone policies. So they come in packages. They go from anywhere from $20,000 worth of coverage all the way up to $250,000 worth of coverage.
And that's max $250? You can't.
It's max for the basic flood insurance policy.
Okay.
And let's say if you have a $350,000 house and you buy a $250,000 flood insurance policy, there's no co-insurance penalty. Since it's the max policy, they still provided that replacement cost and don't have a co-insurance penalty if there ever is a claim. The $250,000 policy comes with $100,000 in contents coverage,
Which is important.
It's important, and that price is $450.
Okay.
So that's basically, if you're in the preferred zone, that's the highest that you'll pay.
So $450 if you're in a great zone.
Right.
Flood
So
zone X.
for instance, if the next lowest package is $200,000 with $80,000 in contents, and that price is $425. I do this so often I know those prices by heart.
Right.
So the A zones and the AE zones the price is all determined by your relationship to it's called the base flood elevation.
Okay.
That's the elevation level that is set by FEMA for your area.
Of your slab, right?
Well, the base flood for the area.
Okay, so
that's the base flood elevation. So that's kind of where they want the houses to be built in that area. So for instance, we just did an elevation certificate in Denham Springs and the base flood elevation was 47.0.
Okay.
So if a house slab is built above 47.0 in that area, you're going to get a pretty good rate because the house is high.
Okay.
But what we're seeing is, especially in Livingston Parish, that a lot of the houses are built below base flood elevation. So the rates are going to be higher. So it all depends on your relationship to the base flood elevation in your area, where your slab sits.
So the lower you go, let's use 47 as an example, the higher you're going to pay for flood insurance.
Correct. Okay. So if your house is sitting at 45 feet, well, that means you're 2 feet below base flood elevation.
Right.
So you're going to pay a much higher rate than if somebody was sitting at 47 feet, which is equal to.
What is a way you can determine what your actual slab is?
Well, you would purchase an elevation certificate,
Which is pretty cheap. We know, our usual
$200.
$200. And
Right.
it could save you hundreds and even thousands of dollars.
It did. In fact, I just had a client this week that they purchased the elevation certificate and they got a much better rate because their house was pretty close to the base flood elevation. They had an older house, which they didn't have to get an elevation certificate to be able to buy flood insurance. They could have done it under the pre-firm grandfathered rate.
You can get grandfathered into
if your house is of a certain age. So in Baton Rouge, if your house is built before 1979, most of the time you can get the pre-firm rate.
Okay.
Like in Livingston Parish, the firm date is 1981. So if your house is built before 1981, then you can get a pre-firm rate on your flood insurance.
So that means that the new owners can get grandfathered into the previous owner's policy?
Well, that's kind of a different grandfathering. I think FEMA's trying to do away with all the grandfathering. So
see, we've done that with clients in the past.
Right. So you're seeing that the pre-firm rates for flood insurance, let's say your house in Baton Rouge built in 1960, they offer you a certain rate, but buying an elevation certificate and rating it that way may provide you with a better rate.
Right.
That's the bottom line.
So
and the point is.
Is there any negative in getting one? So if you get one, do you have to report that elevation certificate?
No, you could always do the pre-firm rate or the rate that you're already paying under, if you have assumed the policy, which you were talking about from the previous seller.
Okay. Because I have a lot of clients, I'll tell you, right when we get a listing and they don't have an elevation certificate because they were grandfathered in or whatnot.
It's a couple $100.
Yes.
You're going to have it. Somebody at that property is going to have it eventually anyway.
Yeah.
Even if they do the pre-firm rate, the way the rates are going, those rates are going to keep rising and rising and rising.
Yeah.
FEMA's doing that on purpose so they don't have to subsidize those older houses anymore.
And I'm pretty sure this happened with my brother where I advised him, I said, look, get an elevation certificate on this home you're going to buy. Right now, the current owners are paying like $2,000 for flood insurance.
Right.
He did it. We submitted it to you, and you got it way cheaper for him, which saves him a lot of money. And when the previous owners, saw that at the closing table, they're like, "Why didn't we do this years ago?"
Right.
That could have saved them a lot of money.
Flood insurance is a way that I differentiate myself and my agency from other agencies because it used to be that flood insurance is flood insurance. FEMA sets the rates and it is what it is. Mm-hmm. But with a little investigation and the more rates go up in the area, that makes it a profitable business for private insurers to come into the marketplace. So we've developed some relationships with some private insurance companies that are offering rates even on houses that have flooded or houses that are in a flood zone. So FEMA's actually getting some competition. And so our agency has some relationships with a few different private insurers that may offer better value for the customer and still satisfy all the loan requirements that the mortgage companies have.
That's really good to know.
Right.
Good. That's great info. I appreciate that.
Yep.